in terms of cryptocurrencies generally, I can say almost with certainty that they will come to a bad ending.
Well, I shouldn't answer any questions on the subject, but I will. There's all kinds of people watching this that are long Bitcoin, and there's nobody that's short, and nobody wants their windpipe stepped on. I don't blame them. I don't like people who step on my windpipe. But I would say this, that if the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, and you said, for a 1% interest in all the farmland in the United States, pay our group, well, let's see, 10 trillion, pay us this bargain price, $25 billion. I'll write you a check this afternoon, $25 billion, now I own 1% of the farmland. If you tell me you own 1% of the apartment houses in the United States, and you offer me a 1% interest, so I'll have a 1% interest in all the apartment houses in the country, and you want whatever it may be for it, then call it another $25 billion or something. I'll write you a check. It's very simple. Now, if you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. And if I've got all the Bitcoin, I'm back where whatever his name was, who may or may not have existed, was 15 years ago. If I've got it all, he could create a mystery about it. But everybody knows what I'm like. I mean, so if I'm trying to get rid of it, people will say, well, why should I buy some Bitcoin from you? I mean, why don't you call it Buffett coin? Make your own or something. Do something. But I'm not going to give you anything for it. And you'd be right, incidentally. But that explains the difference between productive assets and something that depends on the next guy paying you more than the last guy got. Now, net, if you look at it, a lot of commissions have been paid, and there's all kinds of frictional costs that are very real that somebody has paid to a bunch of people who facilitate this game. But whatever one group of the public has taken out, or one group of owners, has come in from other people. I mean, other people have entered the room and they move money around, but there's no more money in the room. It just changed hands with a lot of maybe fraud and costs involved, and a whole bunch of things you lose. You forget the numbers or forget the equation. You can do that with a lot of things. I mean, it's been done throughout history. Certain things have value that don't produce something tangible. I mean, you can say a great painting, probably will have some value 500 years from now. May not, but the odds are pretty good that if it was a big enough name at some point, there will be a few things. I mean, you can find something. If somebody wants to sell you a pyramid or something, and you can charge the viewers, or it'll be around a long time and won't produce anything. But people will find it interesting to go there because I've read about the pyramids. But basically, assets to have value, they have to deliver something to somebody, and there's only one currency that's acceptable in the United States. I mean, you can come up with all kinds of things. We can put up Berkshire coins, or we can put up Berkshire money or anything like that. But we get in trouble, I guess, if we call it money. But in the end, this is money, and there's no reason in the world why the United States government, whose currency people prefer, there's 2.3, just under 2.3 trillion just of these little pieces of paper floating around some places, 7,000 for every man, woman, and child in the United States. And of course, most of them probably aren't in the United States. Who knows? But this is the only thing that's money. And anybody that thinks the United States is going to change to where they let Berkshire money replace theirs, is out of their mind. I mean, so anyway, with those few deficiencies, you can, whether it goes up or down in the next year or 5 years, 10 years, I don't know. But the one thing I'm pretty sure of is that it doesn't multiply, it doesn't produce anything. It's got a magic to it, and people have attached magics to lots of things. I mean, the gold on Wall Street, create magic. We are not an insurance company; we're a tech company. Well, they're an insurance company, but a dozen people or so have raised a lot of money. They just say, just don't pay any attention to the fact that we sell insurance. We are a tech company. Well, in the end, they wrote insurance, and overwhelmingly, they've lost a lot of money since then. You can make up things that were from other people, and that's why.
At one point this weekend, you said that Bitcoin, and this was based, you were asked, Charlie said Bitcoin's like rat poison. You were asked about that comment, and you said, well, it's probably more like rat poison squared. Charlie went on in the meeting to then basically call Bitcoin turds.
He is an expressive sort, isn't he? Maybe when he gets a little older, he'll mature.
I just want to ask you about that because it sparks so much controversy, and particularly on Twitter and some of the places where you might expect people who are trading in cryptocurrency to be pretty loud about what they heard. What is it about Bitcoin that gets you guys so fired up?
Well, when you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing. One of the interesting things, for example, is gold. If you go back to the time of Christ and you look at how many hours of labor you had to give up in order to buy an ounce of gold, and you take it forward to now, you'll find the compound rate maybe 1/10 or 2/10 of 1%. And then you have to insure it during that time and make sure somebody doesn't steal it from you and everything. But it doesn't produce anything. And productive assets, you can pay too much for a productive asset. But I bought a farm in the 1980s, and every year we look at how much it produced the way of soybeans and corn. And at the end of that period, I've still got the farm, and I've gotten some significant income off of it. Apartment house, operating business. But if you and I buy various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there. And I got to hope next time you get more excited after I bought it from you, and then maybe I'll get more excited and buy it from you. And actually, we could sit in the house by ourselves, and we could keep running up the price between the two of us. But at the end of the time, there's one Bitcoin sitting there, and now we got to find somebody else. And they come to an end. I mean, those.
That's a greater fool theory. That's what you're saying.
Well, yeah, it's buying something because you expect the pool of people who want to buy it because they want to sell it to somebody else will grow, and it's wonderful because it does create a rising price, does create more buyers, and people think I've got to get in on this, and it's better if they don't understand it. That's the other thing about non-predictable. If you don't understand it, you get much more excited than if you understand it. I mean, if you buy a bond that says it's going to pay you 4% a year, you're not going to get any pleasant surprises. She's going to pay you 4% a year. But if you can have anything you want to imagine. If you just look at something and say that's magic, you can do it with shark's teeth or seashells or anything. And they did it with tulips in the 17th century in Amsterdam, and they'll do it again. I mean, people, they like to speculate, they like to gamble, and if you can get something, particularly if you have something half plausible going on. If you had bought gold in 1942 and you say, we might lose the war and we might have to run off to some other country, and so let's put our assets in gold, you would have less than a penny for every dollar you got from owning stocks. Less than a penny. Now, if somebody calls that a store of value, I mean, I think they're delusionary.
Okay. Andrew has a question, too. Andrew.
Hey, Warren, related to this issue of Bitcoin, you saw that Goldman Sachs just last week announced that they were going to create effectively a trading operation around cryptocurrencies and Bitcoin in particular. You've been an investor in Goldman. What do you think of their decision to do that?
Well, they probably think that lots of people are going to get very excited about it. Well, and maybe already are, but they think there's money to be made trading them. I don't think they're expressing an opinion on the ultimate value. I would be very surprised if the top partners of Goldman are selling their Goldman stock and putting it into Bitcoin.
I do want to ask Charlie about it, because I think when he talked about the turds, he was referring to this. He said, if you're trading this, it's like watching other people trading turds and deciding you want to get a piece of that.
Well, you're not going to get me to comment on that.
Hopefully Charlie's not awake and not watching right now.
Well, the truth is people do trade on very crazy things over time. Imagine people selling their homes to buy a tulip in Amsterdam. If people think they're going to make money the next day, and worse yet, if they think somebody else that they know is going to make money and they aren't going to make money, it just draws people in. In terms of cryptocurrencies, generally, I can say almost with certainty that they will come to a bad ending. Now, when it happens or how or anything else, I don't know. But I know this: if I could buy long-term puts, if I could buy a 5-year put on every one of the cryptocurrencies, I'd be glad to do it. But I would never short a dime's worth.
Have you thought about trading the futures to take a negative position on Bitcoin?
No.
You would not do that?
No. There's no reason. I get into enough trouble with things I think I know something about. Why in the world should I take a long or short position in something I don't know anything about? So, we don't have to know what cocoa beans are going to do or cryptocurrencies. We just have to focus on 8 or 10 stocks, that businesses basically that we think are decent businesses. But I do think that I think what's going on definitely will come to a bad ending. I mean, you've got virtually everybody. I have a class. I have 11 schools coming on Friday. The questions will be on Bitcoin, and I won't know the answers.